Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
All right, so I'm messing with y'all. I'm so sorry. I got on a whole tangent. See, I love football, but really quickly, I want to just go over some things. So we might run over a little bit so I can make up some time. Again, if you, yeah, exactly. Nate's from Air Force as well. Yeah, that GU melt, you see that? Oh my gosh, it's beautiful. Here's the thing though, I want to make sure who paid attention yesterday and took the markups on S&P. The markups that we did yesterday, and remember, I was like, I wasn't liking that time of day. It wasn't looking like it was doing anything. Who took the markups and caught the breakouts? This breakout right here. And it wasn't really based off of the H1. Remember, I marked up the high and low in the money zone, and I marked up the high and the low of Asian session. And there was an Asian session break. It just happened to happen in the same hour as the break of the money zones. All of this took place outside the money zone. So again, the way Nate teaches is you want to trade in the money zone because those are the best opportunities. You can trade outside the money zone, but the trades could be less successful. However, we saw what S&P and the indices was doing yesterday. There should have been no reason why there was hesitation on this. Remember, we marked up the top, we marked up the bottom. I went down to the M15. It doesn't really matter the time frame for Asian session. It could be M15 or below. It's just H1 makes it looks different. But we marked off Asian session. This is yesterday. High, low. I catch the wicks. Wicks are important. Wicks don't lie. Okay. This was an Asian high, Asian low. Top money zone, money zone. Okay. And this is when we were in. We were like around here somewhere yesterday. Okay. But Asian high, Asian low yesterday. You had a minor break here. This is off of the M15, but I would normally be looking on the M5. So you had a minor break here, and then it kind of played you and went back up, right? Which is very similar to what NAS did earlier in that day. So I would have been very wary of any breaks at that time. Plus, I like looking at the H1 time frame. So when this break happened, this was 9:15. That's right before market open. I would be very wary of any break at right before market open. I would be looking more towards after market open. Okay. And look what happened. It just played you and then it reversed up. All that was is that they were gonna go down, but they were like, nah, we're gonna rinse people first and then go down. Okay. So if you get breaks like now in this hour, or before, like I would say between the beginning of the money zone and like 8 o'clock, you catch a break on the index, you good. If that thing don't start to come to like the 9 o'clock hour, I will wait. Okay. Because you don't want to get stuck in what just happened. All right. But what did they do? Did not break above Asian session high. And I mentioned that yesterday when I was talking because people were trying to get into the buys. And I said, you need to wait for a closure above it before you jump in. That's why I did not jump in and no buys on S&P yesterday. Then what happened later on when the money zone came out, you got your breaks. Asian session break. I missed this break, actually. I missed it. However, this also is not only a Asian session breakout that was occurring, it is also a current day money zone breakout low that was occurring, all right, which was generating momentum. And then I caught it right here on the previous day money zone breakout. and I caught that. And I posted it 125 pips. But you would have known because you should have had your alerts marked up just like I showed y'all yesterday. So how many of y'all caught that? Julian, you're funny. American soccer. I don't understand the rules either. So if you didn't catch it, hopefully you guys will catch it next time. Okay. No, I'm not waiting for the close off the M15. I usually wait for the M5 close. But here's the thing. A couple of things happening. I'm going to get rid of these. So we're going to mark up again today so we can see if we can catch some breaks. I doubt it because of the melt that took place, but let's do this. That was the Asian session low. That was the money zone yesterday, previous low. So it's already been broken. So that trade is gone. There is like no sense in even looking for a trade like that now. Okay. Especially because what that means is when it marked previous set money session low, when the new money zone started, it was way under there. It just continued to drop. So that trade is done. But yesterday's trade, okay, this is the M15. When this was occurring, this is what the H1 looked like. All right, H1 looked like this. I got in this hour. Okay, I saw this is before the AIRO alert occurred, by the way. So I got in during this hour. This is 2200, so it's about 2 o'clock or something like that. A little bit after that FOMC news, pretty much. And so news helped with this. All right. When I saw it coming down hard, I said, oh, it looked like it's about to break. And then I started getting alerts. So I didn't look at it until it started to alert me because I set that trading alert. So when it alerts me, it's already here. Okay. So when it's already there, and I'm going to put a horizontal line here so I can mark it. All right. It's already there. I went down to the M5. Okay. I went down to the M5. This is what the M5 looks like. This is the beginning of the hour, pretty much. This is what I marked. All right. So when I got in, it started dinging like right here for me. So I got a closure on the M5 right here. When I got that closure, and here's how you could tell. Here, zoom in a little bit more. This candle closure on the M5. All right. That's go time. When I got in on the next candle. And I think it was about 60 pips spread it. Drawdown is what I had. I got in like right here. Wait a minute, maybe I got in like right here because it's going to give you spread. And it pulled back on me like, 60, 70 pips. I think it was 60 pips was what I saw. But no matter, it pulled back and then it dropped. And I went 155 pips or more. I only took 125, and this is why. The reason being is because at the time, there was an H1 zone about 125 pips from my entry. So if you wanted to say I got in like right about here, 125 pips was like right here. There was a zone there. And I just went to the zone and I dipped off the H1. So there was little zones on the M15 and the M5 that needed to break, support zones that needed to break for me to hit my take profit. But on a breakout, I'm only going for like 20 pips minimum. And I knew I got that. But I was like, nah, you dropping, especially with all that momentum coming with it from the previous monies, the current day money zone break, the Asian session break, everything was telling me to go down. So that's why I was a lot more confident in that trade. Remember, additional confluences. I'm not going to just take a trade just off of one breakout. I need to take the trade because it's a multitude of breakouts happening, or the H1 fib is telling me that we're in massive retracement and needs to do a fib level breakout, multiple confluences to take your trade. But that's how I took that off the M5. Hopefully that helped answer that one. What you got, Julian? You took a trade off of ES35. Yeah, I know that index. That's the Spanish index, Spanish index. And you lost a lot. There was a huge gap. I don't know that index personally. I haven't really traded it, but I know what they are. I've seen them. France has one too. The French 40, same one. They move differently, and because they're smaller indexes, so the number in the by the way, the number in the name of an index tells you how many companies are in that index. So if it's España 35, there's 35 companies in the index. The France 40, 40 companies, so on and so forth. NASDAQ 100, 100 tech companies. US 30, 30 companies. You see what I'm saying? So that's just a little tidbit in case you guys wanted to know. So the smaller the number that in the amount of companies that are in that index is, I would think, any news that affects them will have a greater impact because you have a small number of companies in there. So the movement, might be more volatile, which is why US 30 is so volatile. Okay, so any type of news, any financial news on, like, say, Apple, okay, if Apple's quarterly report comes out and it's like devastating, expect US 30 to have a big ish chart happening. Okay, and S&P 500, why is that so much smoother? Because it's 500 companies in the index. So if there's major news on one company, it doesn't really cause a big ripple effect across the others because there's so many companies in there. That's why it's a lot smoother running index. Just so you know, and the Russell 2000 as well, same thing. It's a little smoother running index because there's so many companies. News affects it, but not to an extreme to make it volatile. Hopefully that helps. Can I say 40 in French? Oh, no, I can't. I can't. I can't remember. Now you're gonna have me thinking about it. I'm counting in French right now. Hold on. 10, 20, 30. What's 40? Ah, tell me what's 40 because I can do up to 30. That's all I can do. Now write it out for me so I can pronounce it. Ah, there we go. Got there we. Thank you. About the 600 pip gap. Yeah, I know. Sound asleep. I know, Raj. I know. We're gonna mark it up though. We're gonna mark it up. All right. So let's from now on, y'all not gonna miss these breakouts. Okay. So let's mark it up. Again, the N15 and N5, it doesn't really matter. I just do it because of visualization on the money zone. Because when it looks on the H1, sometimes it looks a little off. So I just do it on the N15 or the N5. They're pretty much close. But the money zone is a money zone. You know, you'll see the high of the money zone based on candles. You just want to mark it off. So here's S&P. Let's mark it off. We already know this is the top of the money zone. This is the bottom of the money zone. It already broke out yesterday. And then today, money zone continued to drop. So that move is done, right? Asian session, you're going to mark off high and low. I don't know if that is a wick in there. No, it's not. Okay. No wick in there. High and then low. Catch the wick. Wicks don't lie. Wicks are important. I know Nate used to teach body to body. I think he's changing himself. You know, things evolve, but it's whatever works for you. High and low, as you can see, you got the break and then it dropped. Okay, so Asian session breakout took place already. No trade. So breakout trades on those, done for the day. But that's how you will mark it out. So what I'm saying is, if you are up at the beginning of the money zone, you can mark out your trades and then set alerts. Now, one thing I am going to actually start doing, because I should not have missed the Asian session breakout from yesterday. I shouldn't have missed that. And I got busy or whatever. I'm going to probably start doing pending orders on these things. But when I do the pending order, I'm going to have to be really, really confident that it won't pull back on me or hit like a stop loss or something. So, like, for instance, here's Asian session, right? Had it not broke when it did already, I could have set a pending order for that price to do a sell and drop, maybe just catch 20 pips and dip if I'm not awake for it, you know. But that's something I got to practice because pending orders can go against you, as you well know. But that might be a better way to catch these breakouts, especially if they're going in the direction of a trend. And this is why I would have been more inclined to do this on this move than I would any other. This is why. Remember I said we got to go to the daily candle, right? I told y'all yesterday, look at that bearish engulfing candle that occurred. So yesterday, even though I'm overall bullish, I'm going to always say that I'm overall bullish. I'm still not going to knock any sales that's happening. There's a retracement. So I just need to see, can I get into the sell safely? All right. Look at that beautiful, completely bullish candle yesterday. I mean, it wicked out, but it went drop down, right? And I actually posted to somebody that I would love for this new daily candle today to be below the AIRO MA, and look at what it's doing. I was more inclined to catch any breakout sales than yesterday because of that entire move that was taking place off the daily, right? Here's the other thing. Because of that, I had drew my fib. All right. I just drew my fib for the move. It just happens to coincide with the zigzag. But here's that candle. Here's yesterday. Okay. Yesterday, look at this current candle right here. Remember, it wicked out at this 23.6. The next day candle, as I was looking, that thing was coming below 23.6, and it was like 2 o'clock. It was like 2 o'clock, 2:30, and it was coming below on its way down to 38.2. That was another confluence for me saying that, oh, I need to get into this breakout. Okay. Because the rest of it was too far into the day for S&P to have strength, especially after that news break, for it to want to push back up. I mean, technicals and fundamentals work together when you're trading. Okay. So I'm just telling y'all my steps that I'm walking through as I'm taking this trade and why I was more inclined to and mad that I didn't do a pending order off of it, but I could have. It was a little bit too late, but I'm trying to work on those. But that's what it is. And then look at where the day candle closed. It closed below the 23.6. It wicked out at the 38.2. Okay, kind of wicked out right at the AIRO MA. What did the next day candle do? Drop. That's a beautiful drop. Now, I can't catch a fib level breakout off the daily because it already touched the next fib level off the daily. But what I could do today, especially since it's dropping the way it is, I can catch fib level breakouts on a lower time frame for the sales. Okay, so now that's how I'm looking at it. And let's go down to the H1. Okay, so now I'm on the H1. All the breakouts have occurred, right? So I'm getting rid of them. They're no longer important to me today. All right, it did what it needed. Well, I take that back. I'm gonna leave this Asian session high there because it has not broken that. Okay, I'm gonna leave that Asian session high because one, I got a rejection right off of it. This is fire right here. Remember, wicks don't lie. Don't ignore these wicks. Okay. I'm gonna leave that there because it could very well turn around, shoot up, and break it, and then you got what? A breakout going up. Okay. I'm gonna leave that there. It's important. Actually, this is what you do. Write on it. Asian session high. Okay. Mark it off because I tend to forget what my different lines mean. Okay. Got that done. Now, here we go. And I'm doing this because Dante mentioned on the AP Live launch call yesterday, I'm more of an intraday trader, and that's true. I typically don't like to scalp. I prefer to take 1 or 2, maybe max 3 trades in a week. And by the way, following the trading plan that I be using, if you look at it, I'm only shooting for 75 pips minimum to 250 pips to help with either discount the AIRO subscription if you have to pay for it, if you don't have your 3 for free, or the pep rewards. But if you already, like, say you're covered with your subscription, like, okay, I'm covered with my subscription, right? So I now utilize my trading plan and I have my certain amount of pips I need to make each week. So I take a minimum of 75. If I meet 75, I'm good. I'm done for the week. I don't need to do anything else. But my max, according to my plan, is 125 pips. That's it. That's all I need, right? So to live off of a livable income, right? So if you don't have that and you need to grow your account, it's the same thing. But the point I'm trying to make is, what did I just tell y'all I made yesterday off of the breakout? 125 pips. I don't need to take any more trades for the rest of the week, right? I'm done. So I just want, but if you need to make more pips to try and basically cover your AIRO subscription, then I think it's like 750 pips in a week that would, like, off of 0.01, like on using S&P, for instance, is what and this is all not financial advice, by the way. I'm just telling you, this is what I've been doing. 750 pips a week, maybe 800 would cover the AIRO subscription plus the trade room costs. And S&P, you could catch it if you catch it well. Like, that was a massive drop. I mean, this entire move is about 700 pips. But if you can't catch the whole move, maybe you can catch retracements in like multiple positions, but it's whatever. Even if you don't have to cover your entire AIRO subscription, it's fine. As long as your account is growing and you're getting some benefit about the use of it, hey, don't worry about it, because eventually you'll have enough to cover it. Or refer your 3 people so you can cover your subscription and grow your account. It's like, it's easy. I just want to make sure that I want people to understand that trading doesn't have to be that complicated. You know, you don't have to trade a lot. You can just trade a little bit. I know there's a lot of people that love scalping, and I'm not knocking them at all. They love being in them charts, and that's fine. I am just a very simple, lazy trader. So I don't like being in these charts all the time. So I look for setups, and I set alerts for the setups. And when they get ready to execute, I confirm with additional confluences that we're good. And then I go set it, forget it, move on with my life. That's kind of what I'm trying to show y'all. So yes, I'm more of an intraday trader. I just wanted to put that out there. Let me see, Paresh, but with the pending order, it may not close below and may enter you in with, say, a spike and then go against you. Yes, absolutely. Absolutely, it would. That's why I got to be a little bit more careful on pending orders. Especially if I'm doing them off of a lower time frame, I would need to have a lot more confidence in them. So, and I don't know if I really want to do pending orders on breakouts. It's just a thought that I'm going to practice and see if it works out for me. I'm usually doing pending orders off of older blocks and stuff like that. Okay, so we leave the Asian high there. And Danielle is teaching me Portuguese and Spanish. Look at y'all. I love it. Love it, love it, love it. I do plan on restarting my French, because now I'm feeling some kind of way about Vic and Julian over here talking. So I need to brush up on my French, which of course will lead me back into Spanish, which now I remember Portuguese also is a romantic language. So I'm going to just flow that all in. Plus I'm going to be taking American Sign Language, because I was just introduced to a really nice individual who was wanting to learn to trade. And so we were communicating, and inspired me to be able to learn American Sign Language. And I just realized, and they were just exposing me how there's a huge community of people that are legally deaf or hard of hearing, and they want to learn to trade. But there's a lot of different technology there's some technology that can help them, but they just exposed it to me. So I'm actually going to be partnering with them and just bringing trading to that community a lot more too. So look out for that, you guys, too, in case you guys know anybody that's a part of that community, because no man should be left behind. bet. Okay, cool. All right, Vic. Oh, look at this rejection that's happening off of this support zone on S&P. Looking lovely. All right, so let's mark this up. Remember, I said today's daily. We are under the arrow in May. We're wicking out. It could drop, but on the daily, what was it touching? It touched the 50 fib level. All right, so it's rejecting off of the 50 fib level. So we're just going to see, keep that in mind. All right, but now I trade off of the H1. So it's rejecting off of the 50 fib level, which is basically what this is doing right now. Okay, which is also off of what? An H1 support zone. Okay, which is why that rejection is happening. All this stuff comes into play. What you see on the higher time frame, it come down lower. All right, so here's the thing. If that support zone happens to turn, if this happens to turn bearish and closes this support zone, that sucker's coming down here, I feel like. And if it does, I'm marking it off for a reason. Go back to my daily. Look at where it's at. Look at that. So caution. I'm going to do that again. This support zone goes on the H1. It's coming down to the next H1 zone, right? And look at where that zone is on the daily. Right there. What is this? Order block. See that? This is all the stuff I'm marking on my chart to be aware of what's going on. Order block right there. I go off of this candle right here, the last bearish candle before the move. Order block right there. All up in it too. Off of a daily order block, by the way. Okay? And there's a zone on the daily right there too. I'm more inclined for it to come get this money, you know? So even though, again, I'm overall bullish on them because we're on an uptrend, but this is a pullback that's happening right now. And I believe this is like 88.6 on the fib level, if I'm not mistaken. Close to it. That's also a discount fib level. So you see how those are all confluences to come together to do what? Get ready for the buy. Get ready for the buy. Okay? Because when you get, and this is why I'm saying this, I don't care about the sell right now. I'm gonna try and get into the sell somehow, some way. I ain't gonna be able to get in the sell based off of money zone breakout or Asian session breakout. So I'm gonna get into the sell another way. But if I miss it, I'm not worried about it because the buy is coming. And the buy that's coming, I got pull back down to a discount fib level. That's confluence 1. Daily order block. That if it starts to push up, that would be confluence 2. Then I have a H1 support level that it wants to come to that it will reject off of, confluence 3, which is also rejecting off of a daily support level, confluence 4. 3 or more confluences to take the buy. There should be no reason, if that thing sets up the way it should, that anybody tells me next week that they are not in buy on S&P. Okay? I just gave you 4 confluences. That's a setup that I'm looking for. That's how I mark up my chart for the setup. Okay? So I'm going to keep that there, and this is being recorded so you guys can go through it later on. But that's how I'm marking it up for the setup for the buy. But now, since it ain't there yet, I got to wait for it, and I'm going to come down here and see if we can catch the sell. Now, this is how you're going to try and catch the sell. Ooh, look at this massive rejection. I like it. I see this rejection. It is 5:40 a.m. I feel like S&P trying to play somebody. I'm not taking that rejection as a bullish movement just yet. I feel like we need to wait. I really feel like this support zone has got to go. It got to go. But let's see how are you going to catch it for the sell? How are you going to catch it? All right. One thing, I'm going to draw my fib from what I see on this move right now, right? Bear trading. High, low, high, low. I went to the highest point above the arrow MA. to the lowest point below the arrow MA. And I'm talking about closure. Highest point closed above the arrow MA, lowest point below the arrow MA at this time, current time. That's how I did that. That's strategy 8 of the fib, by the way. I'm doing it off of the H1. Nate teaches it off of the M15, but I like the H1 better because that's just how I trade, okay? But that's how I use that strategy. So I'm drawing it for the downtrend. Even though we're on an overall uptrend, look at the space in between these zones. Come on now. Like if you was to go from this zone to this zone, you mean to tell me you just gonna wait for that? I mean, some people do. I tend to do if I miss it, but let me see if we can catch it. All right. So let's see if we can catch it. High, low. Now, what you're looking for, not this current candle. This is the 5 o'clock candle. All right. Once this 5 o'clock candle, this is 11.5. I'm still testing this fib level right now. So I wouldn't do a fib level breakout off of this just yet. Okay. But if it closes above 11.5, my test is that it would go to 23.6. All right. That's a good 20 pips, 24 pips or something like that. 16 pips, actually. My bad. So 16 pips. That ain't much. All right. But it's if this current hour closes above it, I would anticipate it to go to the next fib level. That's the fib level breakout. Okay, that's the only breakout I'm gonna try and catch today. That's going back up for the buy. Don't let it fool you though, because technically we're still in the overall buy trend on the S&P, right? With the overall buy trend going on, it could very well be restarting the trend again, bouncing off of the 50 fib level from off of the daily. Always keeping in mind what happened on a higher time frame, because higher time frames rule. Lower time frames just shows you what price action is doing, but they don't rule. Trend changes happen as price action builds momentum in lower time frames, but you won't see it till it gets up to here, H1 and above. So I still go by what I see on the higher time frames, and I trade the lower ones just to see what price action is doing, as such as if it's restarting a trend, or if it's trying to start a new trend, or if it's just in retracement kind of thing. That's what I use the lower ones for. All right. But again, it closes above it, I'm more inclined to believe that it'll go to 23.6. Since this is a new fib level for me, I can't necessarily take a trade off it yet, but I'm more have used 23.6. If price comes and closes above 23.6 and has not touched the 38.2 fib level, I'll take the buy to go to the next fib level. Okay, and it's about 20 pips between them. That's not bad. That's an easy pip and dip. That's how I scalp. I'm using the fib level breakout for my scalp, but I'm doing it off of the H1. Okay, that's how I use my fibs. All right, I don't go down to the M5 and scalp as much anymore, only because I've gotten eaten up sometimes, and then I would have to go to the H1 to catch a big swing and make up my money. Got tired of dealing with that. So I use the H1 time frame because that's what I'm comfortable with, and then I scalp based off of fib level breaks. Okay. Hopefully if there's any questions on that, let me know. I'm gonna check the chat. I'll look at Alex. I'll look at Nas. Would you say, Vic, isn't Strat 8 developed by you? Hence, your method would be more authoritative. I worked with Nate for it, yes. But the reason why Nate does it off of the M15, because that's the time frame he's comfortable with. Because he's a scalper. I'm not. But I wouldn't say mine is more authoritative. No, not necessarily. But I would say I have more experience and more success using it on the H1, me personally. But that also could be my bias, just to how I view things on the H1 is easier for me. All right, cool. So let's take a look at that. So that's my setup for S&P. Look at that nice push up. Again, looking at this candlestick formation. Oh, why is it not? There it is. Looking at this candlestick formation, I got a nice rejection off of this support zone. I like it. And closure, bullish engulfing now, actually. Closure above this 11.5. I'm more inclined for it to go to the 23.6. I'm more inclined for that. So that's looking nice. I like that. If it remains bullish engulfing like this, I might take the buy at 6 o'clock and see. I might. And that reminds me too, 6 o'clock is the beginning of the new H4 candle. This is the current H4 candle. Ooh, look at this rejection. That looks pretty nice. So yeah, I'm inclined to take the buy on the next at 6 o'clock. Just looking at this H4 candle with this massive rejection occurring. So not only did this rejection occur in the H1, but the H4 just looks, you know, making this candle look very weak, bearish, very weak. If it keeps pushing up more, yeah, it looks very weak, bearish. And one thing I would like to show y'all is, let me mark off 23.6. Let me mark that off. And let me mark off this 11.5. Okay. I'm going to mark this, and I'm just going to name it real quick. 11.5. I'm going to show y'all something real quick. 11.5 fib, H1. Let me do that because I need to confirm closure. And I need to confirm H1 candle closure, by the way. If you're doing fib level breakouts off of the H1, it needs to go off of H1 candle closures, not lower time frames. My experience. You can try it if you want, but I tried to get in a lower time frame off of it and got burnt multiple times if I drew it off of H1. All right, so this one I want to show you. On this candle right here, okay, when I see a wick like that, I like to draw my fib for the top and bottom of the candle. Okay, and I want to see the 50 fib line right here. If this thing closes, right? If this thing closes above the 50 fib line, right? That tells me that the strength of this candle turned into a weak bearish candle, giving me an additional confluence or information to be more susceptible to take the buy that I'm looking for. So that's just a little tidbit that I wanted to show y'all as well. So now that's one way to kind of measure candle strength. Remember, not only do you need to understand what the formation is, but you also need to understand what's the strength of the candle. Clearly, this is a strong bearish candle, right? You could clearly see that. But when you have wicks, you need to determine whether it is bearish or bullish. So you'll know that by zooming in. This is a bearish candle, but this bearish candle is weakening because of the wick that's forming. And people call it exhaustion or whatever you want to call it. But the strength of it is what you want to measure. And usually 50% is what I'm looking at. So if this thing closes 50% above it, meaning it's weakened that much and is turning weaker and weaker and weaker, then I'm more inclined for me to go for the buy. So that's another tidbit for you guys as well on determining candle strength. So let me see. Hey, Beatrice. Oh, well, thank you. How do I take the fibs off after I draw? Oh, two ways. You can kind of double click on it, and you see how the little arrow, not arrow, excuse me, the little dot opened up. Sometimes if you do it and you double click on it and it'll highlight arrow, I try and find the little middle one and make sure it highlights video, and you fibbo and you right click and you can hit delete, or right click on the chart anywhere, click on object list, and then find your fibbo in your object list. So it's usually one of the last things. I'll find it. See, there it is. Fibbo, highlight it and hit delete that way too. And then you can That's how you take care of that. Okay. I'm measuring the strength of this H4 candle, by the way, because of that wick that's appearing. I could care less about the strength of this one. This is clearly a strong bullish candle, okay? Because it started here, went down, and then the bull said, we're going up. So it took out all them bears and then turned into a bullish engulfing candle. Strong bullish candle. I don't care about that one. I want to see what this H4 candle is saying. And see how it's hovering at that 50 level right there, that 50% level? Cautious. See, I was already so ready to go take the buy at 6 o'clock. And I'm looking at this now and I'm like, oh, wait a minute now. Gotta hold my horses and just wait. Because now I'm looking at it. I don't like the way that candle's moving. I don't know where the strength is now. I don't know if it's bullish or if it's bearish now. It's turning into even, and I don't like that. I need to have a strong sentiment going in the direction that I want to go. So that's another reason why I wait. I'm very patient on my trades, but I try to make, I don't focus on the amount of trades per week. I focus on the quality trade and where am I going. So if I do take the buy on this, okay, if I do take the buy, I'm going to the next fib level. All right, I'm going to the next fib level, which would be this 50 fib doesn't matter because this is off of the H4. Let me give you another S&P so you can see what I'm talking about. Ooh, look at them spreads go. Look at them spreads go. All right, what I am looking for is, I did the highest point, lowest point. Closure above this 11.5, I will be going to the next fib level. Okay, that's only 50 pips. That's a $5 move, pretty much. No, that's more than $5. That's a 72 to 83 is 11 pips. That's a $11 move. That's 110 pips. What am I saying? That's a lot. I don't want to ignore that. That's a lot of pips. That's not something I'm just gonna shy away from. And it's, look at that beautiful rejection with a bullish engulfing. Come on, let's go S&P. Okay, and then so yeah, that's where I'm going to the next field level. However, I'm gonna just show this to you too. Here's the zigzag. So I don't know for sure if my fib would match what the zigzag is coming up with. See, it didn't know because see, it did this drop. Now, if you want to do the zigzag, you would start up at the top. I don't know if you could see, but it started up here. You want to drop it to the top, and there it goes there. So it was close, but as you can see, it's the same thing. It's going to the next fib level. However, 23.6 on this one would be the candle closure that you're looking for to go to the next one. If you're going to draw it based off the zigzag, the fibs are not married to a certain way of drawing them. It's whatever you can see on the chart to be able to look for your setup to help you take your trade. That's all that does. Okay, so you can draw it for whatever way you want, just so that it helps you determine how you want to take trades. That's all. And then of course my stop loss in all of this would be 0, or the support level line will basically be a little bit underneath the wick. That would be my stop loss. All right, so as you can see off the H1, my stop loss will be a heck of a lot bigger. See right here? That's like 193 pip stop loss. All right, so that's a lot for you to just be going here. You know, so I always will look at it and see what's my risk to reward. So that's why I kind of prefer the way I drew it here. And I'm like, okay, now we're looking at something here. So if it closes here, let's just say it's pushing. If it closes here, stop loss is here. It's about 220 pips, right? I would be going here. That's only 83 pips from where I'm at. I don't like it. I will want to try for it to push here. Okay, so I try to go for at least a minimum 1-to-1 risk to reward when I take my trades. So I gotta see how much momentum in my favor it has. Even if this is bullish engulfing off of a support zone with a rejection, it's telling me, yeah, it's looking good. We should be able to hop in there. But if it don't look like it's got a lot of oomph to it, I might not jump in. And this is, again, look at this. That's the H1. Go back to the H4. Now look at that. See how we're above 50% now? I'm feeling good about it. Feeling good about it for 6 o'clock. Now watch it does that, and then it tries to play me. So keep an eye out on that. And then somebody asked about NAS. I'll go to NAS too. Same thing. NAS is doing the same thing. It's doing the same thing. You just have to be careful of NAS because it's more volatile than S&P. So your pips for your drawdown is going to be bigger. So it's the same movement. As long as you can confirm, this is how you handle the US indices. I prefer S&P because I can handle the drawdown. It's a little bit better for my anxiety with trading that I can eat a loss on S&P. I just showed y'all 200 and something pips. On a 0.01, it's only like $20. Okay. On NASDAQ, that same drop, here, I'll draw it for you so you guys can see what I'm talking about. Closure above the AIRO MA. This actually looks more like the drop it was. Let me confirm that. Yeah, that's it. I wanted to go back to the same day. So yeah, current 1, 2, 3. Current 1, 2, 3. There you go. Yeah, they match. Okay. So same thing. Need to make sure I put it on the high. All right, same thing. It get in right here. And look at where my stop loss is now, 748 pips. Okay. Yeah. I mean, so they do the same movement. You just gotta be able to, your account just gotta be able to handle it, handle the drawdown with it. And then US 30 would be doing the same thing, but it's just a greater amount of pips. That's all. It's just what can your account handle. And then also it's a psychological thing too. You know, I trade on this account that you guys see, and you'll see me put a 0.01 and be like, oh, well, you know, Jackie just does 0.01. I actually have this account, live account, linked to other live accounts of mine that are at different balances. And so I have different lot sizes. Some of them are on a standard. So when you see me take a 200 pip loss, and you hear me get upset about it, it's because that same thing happened on a standard lot on another account. That's why I don't like that. Okay. So just so you know, even though it looked like it's a 0.01, it's a psychological thing for me. It's easier for me to even be cautious trading on a 0.01 on an account, because I know it's linked to others. So that's just a way for me to help psychologically in my trading. I know it sounds crazy, but that's just works for me. Same thing can be applied with trading the indices. Some people find US 35 volatility to be okay for them mind-wise. Me, not necessarily. I found US 30 is great. They all move the same. It's just whatever one you're comfortable with trading. I'm comfortable trading S&P because that was the one I was first introduced to by Nate. And then also that's the one whose chart I'm more comfortable with trading because it's a lot more smoother for me to handle. As NASDAQ has a lot of back and forth happening in its candles that don't appeal to me. It's 6 o'clock. So let's see what we got. It closed above the 50. It closed above the 50 and it's taking off. Jackie, get in there. Let me see. It closed above this 11.5. I'm going to see if I can take this trade. And I got that rejection. Hold up. Before I go, let me see what's on my lower time frame. Ooh, I got a arrow alert going up. I ain't got no zone here, though. Why I ain't got no zone? Probably ain't showing me nothing. I got an arrow alert, so I got momentum in my favor. And I got, ooh, M1. Look at that, M1. Hold up. Hold up. I got momentum. We got a pullback. Let it close that M1 resistance. Because if it does, boom, look at where we go. All right, see? Just because it looks good didn't mean I was going to immediately jump in there. But I got a lot of confluences telling me I can go for the buy. So I'm going to wait for this resistance zone to disappear on the M1, and then I'm going to go for the buy. And my first TP is going to be this 23.6, but looking at this M1 zone, probably going to go up here to the next M1 zone. And I'm going to mark that off. Check this out. Let's see. Put that up there. That's my M1 zone. Where's it at on the M5? Ooh, way up there. Yeah. Let's go. Let's go. Come on. Let me see if it closes with y'all. And then I'll hop off. While I'm waiting for that, what you got? Oh, thank you, Beatrice, darling. Is zigzag can be more precise for a beginner fib level learner? Yeah, absolutely. Definitely, I would say use the zigzag to help you draw your fib, but just use it to help guide you in learning how to draw the fib and to be able to read the chart based on what price is doing within those fib levels and where it's going. So definitely utilize that to help you, so that way you can start to get used to it. And then at one point you won't even need the zigzag no more. Okay, and then you can just draw the fib naked chart. And basically you just following the trend. You're using the fib to draw the trend that took place, because the fib is measuring the trend. That's all it's doing. Okay, it just measures the trend and it tells you, oh, from the top point to the bottom point, that trend price has now pulled back 11.5%. That's all that means. What it means to trade it, though, is why people talk about these different fib levels. Oh, when price gets to 61.8, that's the golden ratio. Usually it'll turn around and go back in your favor. So that's why a lot of people look for 61.8 on the fib level, because that means 61.8% of the trend has been retraced, and more than likely it is exhausting itself, and now time to go back. That's all the fib does. And if you think of it in just that way and keep it that simple, it'll make it a lot more easier for you to look at the chart and kind of determine where you want to go. But it takes practice. I've been working with the fib since October of last year. So I've had a lot more time with it, but it speaks to me. It may not speak to everybody else, but I'm more inclined to use it because I found that it's an institutional trading mechanism as well, which is what? You following the banks and what they're doing. That's why those discount fib levels are important. Okay. Well, I just want this zone to go away, y'all. I mean, I had momentum. It's just stuck here. What's the M5 look like? Look at that M5 candle. Okay, this M5 candle is bullish engulfing. Come on. You should break this zone. We got 1 minute left in this candle. Come on, shoot up so I can hop in here. Come on, thing. Let me see. Now I gotta figure out what my stop loss gonna be. Ooh, you wicking out. Stop it. Don't do that. Come on, fill up. Don't do that. Don't do this. Don't do this. I'm trying to think about where my stop gonna be. Probably gonna be the AIRO MA 605. But this 5 o'clock candle, it was bullish engulfing, but it wicked out at the top. That's not good. It's not good. It ain't strong. Come on here. I ain't gonna hold y'all at this 605. I gotta go. But I'll let you know if I get into this. Basically, I'm waiting for this to close. Okay. And you know what? No, I'm not going to do a pending order. I was just thinking about it. Maybe I should do a pending order to hop in this mug while I go get my kids, but I don't want to do that because I'm going to be salty if it turns around. So I'll wait because this is a scalp. I need to sit my behind on the chart and wait for it. But I'm waiting for this M1 to close. And then if that M1 closes and disappears, then that's about 68 pips, 70 pips to the fib level, which would be my first TP, and then my second TP would be up here at the M1 resistance. So that's what I'm looking for. Hopefully that does execute in this current hour, because if so, man, we got some pippage happening, because from that resistance zone to this resistance zone is about 186 pips. So I'm looking for that. So just let me know how you guys are doing. It looks like it's gonna do it, y'all. Come on. And I'm like doing for a 20 pip stop loss. I ain't even playing with this mess right here. You know what I'm saying? Like, that's a 53 pip stop loss. Ooh, that zag line just dropped. Ooh, I got trend pushing. Come on. That's about 53 pips to the AIRO MA. I might take that. Might. I don't know. I don't like that AIRO MA. I'm trying to do 20 pips. So I'm looking at this wick right here on this candle, the previous candle. I'm looking at that as my stop. And that might stop me out like in one candle. I don't know. What's that? That's like 20 something pips here. I don't know. I have to see. More conservative stop will be like right here. So, I mean, not conservative, I guess you can say. That's 81 pips. 81 to make 188. That's still better. That's like a double. That's 1 to 2. So, I might take that. Come on, thing. Yeah, baby. Close and disappear. I just wanted to close. Next minute. Don't you wick out on me. Come on. Push, push, push. That's okay. Push, push, push. Give me my next candle. All right, now you're going too high. Ooh. I'll take that buy. I don't know why that did that, but I'll take that buy. Away we go. And I don't know why that looked like that. That thing should be gone. But that's where we going. And this here. Okay. I'll leave that there. Get rid of that. We'll see what happens. I really hate that. That's about 106 pips from where I'm at to make 165. That's okay. We'll see what happens. But I'm gonna leave it at that. We'll see. But we'll see what happens. If I lose it, I'll lose it. I'll just come back and try and catch it another time. That's just me taking like a fib level breakout, whatever. But I feel more inclined on that. But TP1 is definitely that 23.6. So I'm going to take, I'll move my stop loss to break even once it hits that fib level. So it's a risk-free trade, but I'm really shooting for up here. All right, so that's that. I'm going to stop sharing. Let's see here. Yours gone? Okay, bet. All right, cool. I don't know why mine was just tripping. I got you guys. I got you. I got you. Am I going to do the manifest challenge with Nate? Yeah, I am. I am. Because I'm going to just tell y'all, ain't no way I'm going to give up no free money if Nate's sitting up here calling out signals and stuff. I like the 1 hour too, Daniela. My call is going to be 2 hours on a new platform. No, I'm thinking I'm going to stick with this 1 hour time because it'll be a lot easier for me, especially with my kids getting ready to go back to school. So, you know, that's kind of what I'm doing. Ooh, that thing pulled back on me, y'all. It pulled back. It like took my entry and ran from it. Oh, but anyway. Yeah, final app do the zoo. We be calling with Nate on the challenge. No, I'm gonna just be let Nate do that because that's really his thing. I'm gonna just let Nate do that. But I'm excited about it. I'll tell y'all that I'm excited about it. So yes, definitely, I definitely want to be doing that with him. And like, look, Nate trying to have us all have $2 million accounts. Come on now. All right, you guys, thank you so much for joining me. We'll see how that trade ends up. If it ends up great, great. If not, then I'll just take the L and then I'll just try to get in another trade another way. you know, because you win some, you lose some, but I'm already 125 pips up for the week. Even if I hit this L and it's 80 pips loss, I'm still up 40 pips for the week. I'm not mad at it. Okay. All right. Y'all take care of yourselves. I'll see y'all next week. Be safe. Be kind to each other. Love you guys. And this recording will probably be up later soon. Take care. Oh, stop loss is the 11.5 fib level. It's under the AIRO MA. All right. Take care, you guys. And TP is the M1 resistance zone. All right. Bye.